we go into mid-September, we're going to start seeing reports that are mixed, some good, some bad, and might be some surprises in there that are more negative than positive as we go forward. The other thing, there's a dynamic that's happened in the markets. I haven't been around for a long time. When I started in 1979, the volume on the New York Stock Exchange was 40 million. And the other thing that's helped that happen, and it wasn't just Robinhood, but it's fractional shares.
Sure.
So my favorite line is, investing used to be for someone, now it's for everyone. You know,
but isn't that a good thing though? Because you have more liquidity.
No, it's a very good thing.
Yeah.
It's a very good thing. And, you know, and the fractional shares is given access to markets. Welcome everyone to the Kendall Report. It's Sunday. We're getting ready for a fairly big week. We've got Jackson Hole. We have a lot of stuff to cover tonight. Just for those of you, I know we're still getting the room filled up. It's a little slow filling up tonight, but that's okay. I'm sure the rest will come. I just want to remind you that this is the final 11 days of this discount for the indicators, and we have some really big plans coming up for the fall and beyond, and educational offerings and some other things that we plan on doing. Originally, I was planning a trip to Europe in November. That has been canceled for now, so nothing will happen until after the first of the year. So I will be here, and we plan on a number of events that I think are going to be interesting. Nothing in person, but probably a couple of virtual events for education and learning how to trade, both day trading as well as swing trading and position trading around some of the modeling ideas. So anyway, don't just go to kindlereport.com/indicators. Just going to stay on this because I want everybody to get these at the best price they can. So anyway, looking forward to that. We also have an affiliate program that we're going to be announcing at the first of next month. So there's a lot of really good things happening here. We really want to build this community substantially and around the technology, as well as Wave Tech and Portfolio Expert. So let's get into tonight. Let's talk a little bit about what's going on here as far as the markets. Last week was pretty ugly, right? We were down 2.1% on S&P, down 2.6 on the NASDAQ, Russell down 3.4, so pretty ugly on the small caps for sure. And right now the S&P is up 13.8 on the year. While that sounds terrible, we're still up 13.8. NASDAQ up 27, and the Russell, which has been an underperformer all year, is right at the 5.6% level. So there's just a lot of things that are likely to continue to affect the markets. I've been talking to you about into the third week of September, and I'll go through some analysis tonight. It looks like we have had 3 weeks down, and it's very possible we'll get at least 2 weeks up and maybe another 3 down, but I'll break down those details in the technical section here in a few minutes. We're also going to look at some of the monthly numbers tonight. we're really still kind of mid-month, and I look forward to my typical, it'll be the week after next when we finally do the analysis for the longer term and for the quarter, and we'll be coming in, of course, to the final month of this quarter. A couple things that I want to talk about before we get into any of the economic details and things that are coming out this week, but we are definitely looking at from the Jackson Hole situation. I'm not sure that's not going to happen until Friday. I believe around 10 a.m. is Powell's conference at that time. And if that is the case, then maybe Friday we'll have some sort of a reversal or some reaction of some sort. I don't think he says much different than what he's been saying for a while and what the Fed's been saying, which is, not just longer for maybe forever. I'm saying we're going to see a change in the markets. I've been talking to you folks about this normalization of the interest rates, and I still believe that is what's going on here. And I see a lot of folks talking about, what the markets are telling us and all that. Listen, the markets are a reflection of all the information that's here today and basically those prices. So if you're a pure technician, you're a pure technical person, and you're not trying to figure out how people are, I think some of the most ridiculous conversations I see on Bloomberg, CNBC, how people are talking about how the consumer and how people are going to spend their money. No one knows how that plays out, and how the credit is not expanding, and therefore you can't get any positive events here in the United States because interest rates are at 7% on mortgages, all that stuff. I don't believe that is really the right narrative. I still think we're going through this normalization that I've been talking to you about on this channel for probably 3 or 4 months. That is going to be a continuing going forward, and I think for multiple years, not just for 2023, but also for 24 and maybe well beyond. And we'll just see how. I don't like to get too far ahead. I always tell you that investing is like driving down an old country road on a moonless night, and you have your brights on. You're just looking for the next corner. So we've come into a corner recently that was foreseen. I've been talking about how I thought we were stalling as we got up to that 4,600 level. Thought we would come down to 10-week moving average. Now we're challenging the 21-week moving average. So things have gotten a little deeper and a little more involved than what it looked like it was originally going to be. But that's how markets go. They are going to walk you into step by step through the markets. Now, people can make bigger projections and predictions and that sort. What I was talking about is I think our database is going to go into a correctional phase on the intermediate, which means we come back into 62, maybe 58%. I'll show you in a minute. We got a lot of selling going on in the intermediate database over the weekend, and I'll break all that down here in a minute. But as far as the Fed goes, as far as what they're going to do in Jackson Hole, international perspective, I'm sure there'll be noise coming out. I think the meeting starts on Thursday. It's basically a 2-day party for a bunch of central bankers to hang out in the mountains and try to, I guess, maybe talk about some things that are pertinent. But for the most part, everybody already knows what the plan is. It's really just, in my viewpoint, it's just a party, and they may try to reveal some things, but I doubt if we get much material. We'll see. Certainly, I think what we get more of is the same thing we're saying. Now, one of the other dialogues that I've been talking to you about is that I think that if the Fed's not going to lower rates, but what they might do is stop the QT. And somebody was telling me they're not selling any treasuries. They are selling treasuries, and they're letting the mortgages run off, okay? A typical, like a Ginnie Mae fund is how that works, right? So mortgages are going to have a hard time doing much of anything with those, but the the treasuries, they are in competition with the refinancing of the treasury. So we're going to keep talking as we go forward here about the refinancing of the treasury and the refinancing of all of the treasury needs that are going forward, and they're going to be focusing in on that long end of the treasury curve. And so my scenario has been, and I'll go into detail also on this, and we get into the treasuries, is really we're going to see that back end of the curve continue to stay firm to higher, and ultimately there's almost a flat line across the entire curve. The inversion goes away and all that. Now, as far as I know, a lot of folks are still on, we're going to get the recession. I don't. My opinion is that we don't get a recession, but those ideas could change depending on what kind of configuration we start to see over the next several months. I don't like to get too far ahead of things. That's why I use the database as a guidance to keep me in line and pointing in the general direction that the markets are going. So if you turn back the clock just about a year ago, when right after I had gotten back from my last my overseas trip in August, what you'll see, especially as we come into October and November, is that what we're seeing is that we started to get traction on database, and here we are, like I said, NASDAQ up 27, S&P up 14%. I mean, that's a good year in itself if everything just kind of stabilizes. And that's probably what we're going to see. And I'll discuss this in the technicals here in a few minutes, just as we go into the monthly, as we finally come into the final month of September of this quarter, and we can start to really set up the fourth quarter and get some ideas looking forward there. But for right now, like I said, I'll go through all the database and all that. So let's talk about the economic stuff that's coming out. We got existing homes on Tuesday. That's expected to be, if I can read my writing here, 4.2 million in sales. We have new home sales on Wednesday. That's 705,000. They're still selling houses regardless of the interest rate. Are they as big as they should be? Maybe, no, that's pretty small numbers, really, but they're going to continue to make sales, that's for sure. On Thursday, we have claims, typical 236K on the claims. Continuing claims came in at 1.716 million last week. I think that number could continue to kind of bounce around between 1.69 and maybe getting up to 1.73 or something like that. Maybe there's some increases coming up. Maybe some of this Hollywood stuff starts to show up. There's a couple other elements that could start to show up in these numbers, but I think everybody knows about them. I don't think they're going to be real material from that standpoint. On Friday, we've got the U of M, University of Michigan, consumer confidence, and that's coming out. I don't see that as a material number. And then, of course, the big event will be at 10 a.m. that morning with Powell speaking. And I've already basically talked about what I believe is happening. I don't think it's going to be material, the talk. Famous last words, now that I said that, it will be material. But I don't think they're going to reveal anything. And I don't even think they would come out and make a comment about QT. But I do believe that is, if there's going to be something that's viewed as a pivot, that is going to be where it's going to happen. It's going to happen in that quantitative tightening area. They can talk about that pretty freely, and meanwhile keep the inflation strong words out there and fighting inflation. And I still believe in September that we're going to get one more rate increase. I mean, why not? Let's just get it over with. I think finally that will probably put us at the material rate, which I put out there as 5.2 to 5.5. That was my number 6 months ago, and we're finally there, and I think we get there, and I think the markets just move on from there. And I think when what I'm looking at, we're going to go through the monthly here in a minute, but it looks like we have another month of flat to some weakness coming in at September as we start to get into the final part of August and start to move forward. And I'll break this down the best we can, and certainly the database is starting to reflect that at all as well. And we'll see as we go through the next couple of weeks what kind of selling that comes into the intermediate database. The short-term database, which I'll go through here in a minute, is already blowing out. So let's go ahead and get into the database and some of that configuration. So we'll go ahead and start with the short-term models. They're at 17.15. I'll discuss the numbers. We had 105 buys, 178 sells for the opening tomorrow. So we're at 17.5. There was just a slight more amount of sales than there were buying. And then if we look at the weekly, this is where the activity was. There's 3,237 exits and only 128 buys. So it was real bias. You can see it was negative across the board on all of the metrics here. If we go over and take a look real quick at the weekly, we're at 64.98% right now, and that is going to be the case. Yeah, we do have, and one of the things I apologize for not mentioning is we do have some earnings coming out. We got NVIDIA, we've got Zoom. I know there's a couple others, but for the most part, we're winding down the earnings. So there's a last few stragglers out on the pattern, and I am actually going to take a look at the STX monthly, and I'll talk to you about that in just a few minutes here. But as far as the database goes, it looks like I talked to you about this 68 to 62, a big tranche of selling coming in. We're here at the 64.98. The other numbers to watch, 62.58 is the number. And then really, once we get much under 58, we could see attrition down into the 40 handle. I'll talk about that, and that's a couple weeks away. So there's no real reason to look at that. We'll try to judge that as we come into the end of the week from the standpoint of what's going on there. So let's go ahead and get into the technicals here. All right, so we're looking at the hourly chart, and it looks like we've got a little strength coming in here for probably the next couple hours. We could trade back into around the 40 period moving average here on the hourly, which right now is going to put us around, let me just bring up that number. That put us around the 43.94, I'm sorry. Yeah, let me get the right number here. That's going to put us up at the 44.68 level. That's going to be an extreme. I talked about that number the other day. I don't know if we can get up that high or not, but we certainly have some bias. And it looks like we're going to flatten out around maybe sell off into London after we're about an hour out from maybe rolling over. We've got a slight bid right now. We're up 4.25 on the day right now, but looks like we should fade back in and get in and stabilize as we come in, and maybe in the middle, a couple hours before the New York Open, maybe some strength to come back in. But I think we'll set this up here more on the daily chart here as we look at the market grid. So we'll go to daily. Market grid has turned up, which is encouraging. The PPMs are showing that we should try to start to stabilize here a little bit. There's going to be lots of resistance around the 10-period moving average, which right now is 44.50. And a couple times the other day we got up to 44.36 was the high. That area up there is going to be pretty stiff resistance. We look at the market grid for today and overnight into Monday, and we're looking at right now R3 is 44.15. It's interesting, that number keeps coming up. That's about where the market's been stalling, around 44.15, right in that level. We're trading 43.87 right now, so that's a decent rally up to there. But the R3, that's R3. RXT is 44.24. So I don't see really much above that for tomorrow. It's possible. You can see that the PPM 1 is trying to turn up, but we still are not projected to get through until Wednesday to get through the first derivative of PPM 1, which tells us we should challenge that 10-period moving average. And like I said, that right now that's at 44.50, but if we look at the angle rate, it's down about 15 per day. So tomorrow that's going to be 44.35, then 44.20. So that's not as dramatic as it sounds right now to get up there, and it's possible we can get through that level. And at 44.50, 44.60 is still going to be a pretty big number on the upside. On the downside, we still have some relative risk on the downside, but I think we saw something over the last couple sessions. If we go back, we saw 43.50. You may recall a couple of weeks ago, I said there could be a three handle around 43.50 is around the extreme. That's where we printed exactly 43.50. And on Friday, we were a 43.77 low on Thursday. So that's probably going to represent a bit of a low from that standpoint. I don't think we get below that. If we go below that, I'll show you. Let's go to the weekly so we can set that up. But I'm going with today, I'm going for our let me get the right number here. Yeah, R3 is 44.22, R2 is 44.08. So we've looked for S1, R2, possibility of an R3. I think we have a little bias to the upside as we come into Monday's action. If we penetrate through the S1 level, though, all of a sudden S2 is a retest of that 43.50 level, and there's two numbers below, 43.43, and 43.31. So there is some downside risk, but it looks like the probabilities are pointing slightly to the positive side as we come into Monday. Let's go to the weekly chart. As I mentioned, on Friday, we got to 43.50, and 43.31 was the 21 moving average, and that is going to be moving. That is 43.43, which is a number I just pointed out on the market grid just a second ago. I think we hold in that level, and we should start to see. Looks like we were talking about, if you go back to July 17th, this is where we were seeing the algos turning down, and they were all going through their first, second derivatives. That has happened. Now where we are is we're still at trend mode. PPM 1 is at a 0.43. So there is going to be some probabilities for the market to move back up towards that level, which is 44.76, and that puts us into that 44.60, 70 level, and we should see some downside from pretty much. If we look at the weekly grid, S1 is 43.50, which it would be a retest of last week's low. So I do expect to see an upward bias here, trying to work our way back up into this moving average range. So I'm going to go to monthly because I want to discuss something that I want to set up, because I think this is something more substantial. we still have a really good angle of attack here. PPM1 is plus 1.21. PPM2 is negative, which is 0.20, and PPM3 is right now positive as well. So we have this 21 cutting through the middle here, with the 10 is crossing over to the upside. So the 10 is 4201, the 21 is 4180. So we've got this upward slope, which I believe is going to dominate over the next couple months. So we're looking at September as a flat period. So I would continue to expect to see that 10-month moving average come into play. Also, if we look at the projected market grid, that's going to also tell us that it's interesting numbers, because we have that 4323 is S1, which is very close to that 10-month moving average here. That 10-month is going to be around 4250. That would be the extreme. 4250 is S2 on the monthly. So we could still see a 42 handle as we come into September. So my expectation would be a possibility of a little bounce for maybe a week and a half, 5 to 8 days, and then maybe a retest of the low, and maybe even see the 42 handle here. There's some work to be done before this market is ready to move forward. And everything for me is targeted toward the third week of September as the potential bottom of this pattern, whatever is going to be unfolding. So I'll be talking about that as we come into the end of the week and going forward. Yeah, I'm probably on 50, Bo, just for the record. Yeah, I'm on 50 on here. So let me go to that real quick. Yeah, I'm on the monthly on the 50 so that I can get the numbers. So yeah, just go to 50 on that. I could go to SPX and I'd have enough data, but this gives you some decent numbers. So these are all on 50. So the bottom line is that these general trends are going to continue to be unfolding as we go forward. All right, so let's take a look at the NASDAQ. The NASDAQ is right at that 21 period moving average. We're looking right now at the 21 is 14,518. Last trade right now is 14,781. So it's just a little bit below. I think we will probably hold this level. You can see we're at 0.48 on the PPM2, which suggests that we're going to have some very substantial support at that level. I think we start to work up as we go forward. But if you look at the PPMs, this is weekly now on the NASDAQ, as we're not getting any signs that we're going to turn up on the weekly. So the 10-week moving average, what this suggests is that we'll be sandwiched between this simple 21 value and the 10 value on the upside. And the 10 value right now is 15,263. So you're looking at that range of that 14.5 to 15.5 area. We should stay within there. Doesn't look like there's anything exciting happening other than ultimately we could see sideways into that October, into late September to early October, and then maybe we can get something. But everything that's being forecasted right now from the algos are suggesting that we're going to continue to see momentum fall off. So maybe we end up in a more negative scenario as we go down. I actually don't see the potential, and we'll talk about this when we get to the end of the month, of an ATH anytime soon here. I think we end up in a very choppy sideways range. We've got a lot to digest as we come into the fourth quarter, and so it's not going to be as bullish as it felt when we traded up to the 46 handle on the S&P. You can see here on the daily. Daily is very similar to the S&P, where we're trying to get a turn up on the PPM. So that 10-period moving average will be in play, and then ultimately maybe we get up to the 21. But we should see, like I said, maybe a 3 to 5 day recovery and trading up into that level. And this pattern looks pretty solid. The monthly patterns on all of these indexes are way too powerful from the standpoint to be projecting any kind of collapse or anything. I think you're going to see the markets really just get into a very broad range of trading. S&P could see that 42 handle, mid 42s, and the high is going to be maybe 45 ends up to be the new peak from this standpoint. Yeah, I won't check. I'll just make a quick comment on Tesla. I did cover that, and I did talk about the probabilities of Tesla going to the 200. Also, I think Apple hitting 167, I think was the number. I'm going off memory here. But there's some definitely some big numbers unfolding here. And maybe prior, I'm not sure what day NVIDIA is coming out. Maybe we can talk about that. If we get on a pretty slow pattern, maybe one night on Tuesday night or something, I would go through some stocks. Somewhat interesting on the Russell, we did end up with a reversal. We basically bounced off the 200, got a bit of a reversal, and it looks like maybe that's enough to pull us up into the 10-period moving average. That's 20. That's 1886. Probably looking at some numbers that's declining pretty decent. Let's see here. Actually, that number's at 1908. It's dropping about 10 handles per day. So in just a few days, it'll be just below the 1900 handle. So that looks like that all of these folks on all of these indexes, the SMA 10 is going to be your very first level to watch for rejections, and that's where we should move toward over the next couple of days. But those numbers are dropping, so make sure you keep track of that angle of attack and how much is going on there. I mentioned this on Thursday night, Friday's video, that I thought we're kind of peaking out on. This is the daily 10-year, and we're kind of peaking out there. It looks like we're going to be able to challenge these moving averages, maybe come back into 415, 410 level on the 30-year. It's pretty classical that everybody has gotten, I think, a little overextended. They went right to that fib target 2 that I was talking about, and these numbers go back. This is the daily chart. That fib target 2 target at 430 goes back to July 25th is when those numbers came out. And there is some new numbers that I mentioned that are calculating now, which puts us at we just get to those numbers there. 442, 460, 471. They could be a possibility, but if you look at what's happening here with the algos, they are starting to project that we're going to lose a lot of momentum. I think we end up probably closer to 410, maybe even 405, and just stabilizing in here between 420 and 4 even. We're just going to round off the numbers. Let's go to the weekly and take a look at this real quick. So as I've been talking about, the weekly still has that angle of attack. If you look at where that 10-week moving average is right now, that is that's at 394, and it's going up. Let me just see here, 394. Yeah, bear with me 1 second here. Yeah, so we're probably looking at this getting up to like I said, 4%, 405. We should start to flatten out here, and it looks like the peak momentum is there, but that doesn't mean the peak of the prices are here. We still have Fib target 2 on the weekly was at the 429 level. Then we still have a 447, which is a red line up here. That's still a possibility, but I don't think this week we're going to see that kind of follow through. Let's go ahead and look at the 2-year. Two-year starting to flatten off a little sooner. So like I said, I'm expecting all of these yields just to flatten out and start to stabilize. The front end is going to stay high just with the Fed funds. The Fed funds all the way out to 13-week T-bills. All of those numbers are going to be 5 1/4, 5%. 5 handles across the board. So it's going to take a while for this normalization to happen once we hit these levels. I think we're very close to peak levels on, as I said, maybe one more increase on the Fed funds with the next meeting at the Fed. And regardless whether they do or they don't, I think you just see everything starting to stabilize here from that standpoint. As we start the week, let's take a quick look at the Dow. This is the weekly Dow chart. We're continuing to see some probabilities for us to go into these Fibonacci targets here, which are right at the 104.98. We'll call it 105 to 106 level on the upside. Looks like we should stay sideways here for a couple weeks, and then maybe one more surge to the upside, and then we'll start to get into peak levels of the Dow. I don't see us going into some big bull phase like we did in 22. That's not going to happen. But we could see that 105, 106, just rounding numbers off. All right, so as we look at the crude oil is backfilling here. We're starting to see momentum peak out. We're probably going to stay somewhat stable above around the 78, 77.50 level should be the bottom end of this. We just use the market grid as a guideline here. You can see 77.41 STX. This is weekly. And on the upside, 83.81 is the RXT level. So you're really looking at those ranges. Most likely we'll see maybe an S1, S2, 79 even, and R2 is 82.20. So expect to see this thing just stay stable. I don't see anything big coming in oil. A little ways down the road as we get in toward the end of the year, we could see maybe some move higher as we come into 2024. But for right now, it looks like stable. We should stay above that 10-period moving average in that range I just mentioned. So let's take a look at the gold. Gold continues to be under pressure. Poor Peter Schiff. He's just can't get. He's got everything he wants but he's not getting paid. And it looks to me that we're going to see possibly down to the 1860 level. The PPMs are turning up on PPM 1, so look for range bound between the 40 and the 21, possibly the 10 period moving average. Those right now are between the extreme down here at this, looking at the market grid for this week is really looking at 1894 S2. The extreme is 1878. On the upside, R1, 1926, 1938. I think this thing just stabilizes here, and it looks like we still have downward pressure coming in for the next several weeks in gold. So nothing good there is going to happen. All right, so here's a weekly Bitcoin. We come down to some of those support levels that I've been talking about, which are coming into that 28.55. We printed down 25.06 on this exchange was the 25.601. It was the bottom right down to that 40 period moving average. So this is pretty close to the end. The potential is to go down to 27,200. There's still some downside. If we look at the PPMs here on a weekly, we're still trying to roll over. The fib targets on the downside right now, 25,539, 23,140, and 21,6. So we could see some downside here, and it looks like stability is not going to come in. Everything, I keep saying this, it seems like every night, everything keeps pointing to second, third week of September for any possibilities for the market to finally stabilize and maybe get some sort of bottom in place at that time. So the bottom line here on Bitcoin is we're probably got some more downside. Let me just bring us into the daily chart here. You can see the big hit we took the other day, and we're starting to see some rebound set up here, but market grid is showing that contraction phase. So we're going to look at it 2 or 3 days before we get into any kind of configuration where we can get a further rally. So we're definitely going to probably have seen the extremes, but those numbers on the weekly charts are fairly close to, I think, where the extremes will be in this pattern. Okay, folks, that'll do it for tonight. See, got away with only 44 minutes tonight, so I was able to get through this pretty quick. Just in summary, like I said, I don't see that anything that's going to come out of Powell's mouth on Friday is going to change much, and I think there'll be a lot of anticipation. So look for a stable market as we go forward. There could be. I really don't see any of the news, any of the things that are coming out here that are going to be material of any sort. We went through the news earlier. There's nothing really substantial. If housing starts to miss, everybody expects that to happen, I think, just with the interest rates where they are. So I don't see any pitfalls. We'll see as we go through the week what kind of action we get tomorrow with the full session, and then see if we can't get a rebound at least back into the numbers that I discussed tonight. So just final comment. Thank you, everyone, for watching. Make sure if you're going to get the indicators, I want you to be part of these upcoming events that we have, so you have some context. So kendallreport.com/indicators, and you can get them set up there. Don't miss the discount. 11 more days and counting. So anyway, folks, have a great evening. Thanks for showing up. I really appreciate it. And we'll talk to you tomorrow at the same time. See you then.